Hey everybody.
Hi.
Sorry we're running a few minutes late. It's been a hectic week. How's everybody else doing? Don't forget, we want to hear your messages. We want to hear your questions. We want you guys to definitely be controlling this conversation. So if you guys want to put some information or questions or greetings in the chat box, we would love to be able to answer those for you and go from there. And I just want to make sure. So we have 13 people right now. So we'll give it a few minutes because I know we had about 50 people registered, which is awesome. We just want to make sure we have enough time for some people to get on because I'm sure everybody's been having a crazy week just like us because, you know, that's just the way she goes. So, yeah.
Well, we can make fun of my eyebrows that aren't existing today because I didn't have time to put makeup on.
There's that.
Yes, I am really an albino. No, actually, I am very blonde and a natural redhead and without pencils and all that fine stuff because I can't get somebody to draw them permanently on me right now with everything going on. I have to do it myself, and today was one of those days when your phone starts ringing at 7:30 in the morning, you don't get to do all the pretty things. So yeah, that's the way it goes.
That's what happens.
Yeah.
So we have some fun topics to cover today. And then if you guys again have questions, we will definitely answer those. And then Bailey, I need to see the bottom stuff. I like being able to see the attendees and stuff. Okay, well let's stay on. Okay.
We're just getting technical help here because we need it at all moments of the day. Well, we hope everybody's been having a good week. We've been doing pretty good here with sunshine anyways, which is kind of nice. That's a big change. I don't know about the rest of you where you are in the world, but hopefully you're getting some sunshine because I think everybody could use the sunshine.
Yeah, it was pretty gross there this week for a couple days. It was raining, torrential rains. It sounded like it was raining in my house because it was hitting the house on the side so bad. But
the one storm there,
made it through. And now we got sunshine. So yeah, well, let's just dive in then.
Sure. Okay. So we've got the benefit. Oh, what do we got? Good to see you. Yeah, nice to see you, Alex.
Thanks, Alex.
How-tos of real estate investing. So we've got some topics here. And again, we're all here for you guys. So if there's any questions about any topic, type it in and we'll give you whatever answer we can. By all means, let us know what you're thinking. And then that way you'll find that it goes to a much better productive direction. So, benefits of investing in brick and mortar versus other traditional investment vehicles. Wow. Let me count the ways. You want to start?
Yeah, I can tend to be a little ranty with this, but I mean, if you look at other traditional investment vehicles, I mean, really, we're talking about mutual funds, GICs, stocks, right? All of that stuff is literally backed by paper. Or it's in a bank account where it's secured by the account itself, but you're literally making such low returns that really what's the point, right? So there's, you know, that old adage, the higher risk, higher reward. But for us, again,
it's not always true.
Yeah, exactly. I mean, if you know what you're investing in, and you can look at the actual valuation and you're very confident in where those numbers come from and you're understanding the economics behind what is happening, that there's stuff there. I think there's a lot of value there. So again, we call it brick and mortar whenever you're investing in real estate. But for us, it just makes sense. And even if you go back to looking at the roots of, you know, just the base principles. So if somebody comes to me and they say, well, oh no, you know, whatever, and I don't want to get into the non-traditional stuff, which is like Bitcoin and cryptocurrencies and all that stuff. But at the end of the day, I always say, okay, no worries. So let's just talk about stocks and mutual funds. So if you wanted to go to your bank and say, hey, I have a really great idea. I'm going to dump $250,000 into the stock market. Can you finance that for me? What are they going to say? No, right? Why? Because they don't like risk. Well, if you came to them and said, hey, I'm going to buy a $250,000 asset as far as in actual property, be it your own home or a rental property, would you be willing to finance some of that? What's the bank going to say? Yeah. And so why are they willing to do that? If you break it down, I mean, it kind of just makes logical sense because they know that that brick and mortar asset is going to hold its value.
Rochelle and I have always kind of looked at stocks and different things like that. Don't get us wrong. There's a place and time for everything. Our vision for looking at those kinds of investments, when we basically have money that we know isn't needed for the business and isn't needed to live on, that's when we'll put investments in stocks and those kinds of things. Because if it was gone tomorrow, are you okay with that? And that at that point in our life, that's when we'll invest in that. So again, everybody's different, to each their own. Another thing, like Rochelle talked about, mitigating your risk. The other part there is, okay, if you're really going to go after stocks and commodities or real estate, it comes down to who you partner with, right? Make sure you're partnering with somebody that does have your best interests at heart and good knowledge in whatever field you're looking at. So take those into consideration when you're looking at any of these kind of areas. And again, we're not going to lie, we're biased. We love real estate. We've seen the value we've given to our customers and clients and investors and those kinds of things over and over and over. And so again, why are we passionate about that? That's why, because the security is there and the risk is way down, but the profit is there, which is higher than most. So, I mean, again, that's why we're biased and we prefer these.
And at the end of the day, I do, when I'm retired in my 40s, I do want to learn how to invest in the stock market, but I want to do it hands-on, because for myself, I am a control freak. So I'm not going to invest in something that I don't have control over. And so if you understand, the puts and options and, stock options and stuff like that, and you can ride and make it a little bit more predictable, I'm good with that, because again, it's within my parameters. So I know how high I'm willing to go. I know how low I'm willing to go. And it's not just putting it into the stock market and letting it play around like you're playing Russian roulette, right?
Yeah.
So again, I just like to have a lot more of an opinion or a lot more control over what I'm investing in. Again, everybody's totally different. If you do your own thing, that's great. But even look at day traders, right? Yep. They're the ones who are literally doing the trades. They're coming in, they're out, they're using their time to turn around and invest in the stocks. Well, again, if you're a really busy person and you don't have that time to commit to learning how to do it correctly and making sure that you're there when the stock, whatever they call it, the stock market, I guess, stock market is open, then you can't even play in that game properly. So again, for me, I just stay in my lane, very, very blinders on, journey to $1 billion. If it has nothing to do with investing in residential real estate, we're getting us closer to our goal of controlling $1 billion worth of residential real estate in the next couple of years here. I don't look at it. And we get pitched for stuff all the time.
Oh, yeah.
Like, you guys, should you get into this? You get into this. And I'm like, no.
We already played shiny object syndrome.
Yeah, it's honestly, like we could have fast tracked our business probably, I'd say, by about 2 years if we wouldn't have wasted the first original couple years just being very distracted. But again,
live and learn.
Yeah,
best lessons we got.
Yeah,
we learned so much from that.
Yeah.
Whether it's the right time to bring on the right people, whether it's the right time to shift and adapt, like all those kinds of things came out of us kind of that year of figuring stuff out. So again, it was awesome because the lessons that we learned are invaluable, because it's how we were able to now build that focus, stay focused, and get to $1 billion in residential real estate.
Yeah. And I mean, some of you guys might even notice this too. If you look at everything that you have going on in your world and in your lives, do you feel like you're really distracted because you have this opportunity here and this here and this here and this here and this here? And then at the end of the day, you actually, when you think about it and you're running everything, you're like, wow, I'm really no further ahead than I was last year. Whereas if you would have put all of that attention and all of that time and energy and focus into one of those things, you probably would have been 10 times ahead in that one aspect instead of chasing your tail, right? So sometimes it just comes down to just reflecting on your goals and what it is that you want out of things. And I think for us, like, that's where the alignment comes with all the clients and investors that we work with, is I am, Alisa takes just like a discovery session phone calls too, but for me, I do most of them. And for me, I won't take on a client that is not very clear about what their intentions and their goals are. Because for me, I don't like dealing with people that come with really fuzzy ideas. I like when people are like, this is what I want, this is where I'm going, and this is what I'm working with. Because for us, we're like, okay, boom, 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 here's your map.
Or at least be open enough to figure it out
Yeah.
in that conversation.
Yeah, sometimes
you
it's a
know?
work in progress,
Yeah.
which is fine. But when people are like, oh, I don't know, oh, when there's any sort of indecisiveness, that
It's
drives me
tough.
bonkers because they might do a deal with us and then, be 2 years into a hassle-free landlord deal and then, or sorry, be 6 months into a 2-year hassle-free landlord deal. And if they weren't clear on their direction, now they might get shiny object syndrome and be like, oh, I want to take my money out and do this. I'm like, well, it's not an option, right? So we want to work with people who are very clear in what they're looking for and very just kind of centered in what it is that is a good fit for them. So yeah. Okay,
Absolutely.
let's move on to the next.
Okay. Active versus passive investing and how to know which is best for you. Okay, we honestly talk about this a lot. It actually stems back to even the stuff Rochelle was talking about figuring out what you want and who you are. Because if you want to be active, so first we'll define them. Active is, hey, you've watched HGTV and you've now decided you're going to go buy a property, you're going to get the tools and you're going to get on the tools and you are going to flip the property, or you're buying rental properties, you're doing all the things, or you're working with a property management company as a property owner for rental properties. Okay, so those are versions of active. I can go on and on and on, but from those examples you should have an understanding of the theory. Passive. Okay, passive is where someone, they may be educated enough to understand a little bit of language. They have educated in, hey, I kind of like what this company's doing, so I'm going to partner with them. I'm going to work with them, as in I'm going to help fund things and sit back and let my money do the work for me. Okay, so with us, we pair very, 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 very well with passive investors. Why? Because we're active. We're incredibly active, to the point where we have 65 employees active. So that's the difference between those two. And the only one who can answer which is best for you is you. Yeah. Okay? You need to sit down and ask those hard questions. Okay? How much of my life am I willing to give up to be active? Am I okay with phone calls in the middle of the night? Am I okay opening up a house and then coming across something that I'm like, oh boy, I have no idea what I'm looking at? I can't answer those questions for you. Only you can answer those questions.
Or even if you don't want to be the one swinging the hammer and doing the things, that's fine. But are you okay managing the people who are doing those things? Because at the end of the day, there's a lot of energy that goes into working with people. And you have to strategize, you have to make sure that things make sense. And then all of a sudden, at the end of the day, you are going to turn around and say, I can't do this. I don't have the time. It's not worth my time, my energy, and whatever. And, you can't do that when you're halfway through a rehab, right? So you got to suck it up, get it to the finish, or finish it to the end and whatnot, and then, readjust after that. It's the same thing with, we might have a phone call with somebody, and then all of a sudden at the end of the day, somebody says, oh, well, I already have 5 student rentals. I manage them all myself. I can get better returns where I'm making everything and I'm keeping everything and whatever. And I'm like, that's great. You're an active investor. Congratulations. Go do more of that. Keep all the things, use your time.
And neither one is right or wrong. It just comes down to which one are you. Yeah. That's all it is. Active investors won't partner well with us unless they're coming into a retirement phase where they're like, I've done the active side, now I need to figure out passive. Then we've done that. We've had landlords that actually we've turned around and got houses that we bought off landlords that were very active, and then they're turning around and going into the passive side of our business, right? Like, it's great. So again, which part of that, being active or passive, is best suited for your life?
And another thing, another reason that sometimes people go into active kind of as a default is if they don't have the money. Like Alisa and I, when we started, we had no cash, no credit, no none of the things, right? We had the education because Alisa had invested in our education. But at the end of the day, we couldn't do anything other than the things. So for us, it wasn't even an option, right? So now, we get calls from people all the time. Hey, I love what you girls are doing. I want to be like you, blah, 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 blah. Then go get educated. And it's a different time now. We educated 8 years ago. And so now, really, you can go and find all the things for a lot less money than we invested, because everything is so out there in the Google world and on the internet, right? You can Google a lot of things. Again, you still have to be careful and cautious of who you're learning from, But at the end of the day, there's a lot of stuff you can learn from books and whatever. The biggest thing though is if you're learning, you need to learn, implement, and do. You can't just learn forever and never take action, right? So that's where a lot of times people don't, they kind of forget that side. They might just be learning and not doing the things, but that's where no, we're not. Okay. It's a two-part. Oh yeah, and I'll notice. Okay. I'll mention that too. So we're actually doing. There was so much amazing content for this with the how-tos of real estate investing that we actually are doing 2 parts. Okay. So the first hour, we're just going to focus on 4 of the really high-level questions, and then next week we'll continue on the rest. But right now there was so much information, and I was like, man, if we get questions and we have to try and get through all this content in an hour, it's definitely not going to be enough time. So yeah, that's what we split it up.
Okay.
So awesome. Yeah, so active versus passive. So maybe in the comments you guys can say, do you consider yourself an active investor? Do you consider yourself a passive investor? Or are you a mixture? Maybe you're a good blend, right? Again, it does serve 2 different things. We've got people that might have some active investments and they're transitioning over to being more passive. Or we have people who might be active with their actual cash and rental properties, but they're passive because they're leveraging their underperforming invested funds. So maybe they're private money lenders when it comes to being, using their LIRAs or their RSPs or their TFSAs. I know we've got a ton of clients who do both our fund to flip and our hassle-free landlord opportunities because it blends really well. The fund to flip is more so for the wealth building and the long-term play, whereas hassle-free landlord is really what fuels people for their month-to-month expenses, which is great if you're trying to get more money into your bank account every month. So again, this is why we encourage people always to book in a discovery session phone call if you have specific questions about your situation, because what works for you is not going to work for him and her and all that stuff. So we love being able to customize things that make sense. So Colleen, passive, woohoo. Yeah. And there's nothing wrong with either. It just makes sense as to what works for you. So do we have any questions at all? Come on, guys. We got 19 of you now. Come on. If you guys each brought us a question, that'll sail us through to the rest of the end of the epic hour. So put them in there. Put us to the test. All right. So next topic is the due diligence process.
So this one can be overwhelming and daunting to people. Sometimes people get almost lost or caught up in analysis paralysis, basically, or paralysis by analysis, however you want to word it. And I think that people just need to kind of take a step back when they're doing due diligence. Make sure that you go in, make sure that your gut is telling you it's okay. And then if that is happening and the facts are lining up, then you've done your part, right? I think a lot of people sometimes aren't quite as good on due diligence as they could be. And I think sometimes people go too far. So it can, again, be either direction. Due diligence are things like, honestly, Rochelle and I are open books. I mean, people ask us all kinds of questions, what drove you into real estate? Why real estate? Like all of these things. If you're there, you should have that ability to comfortably ask any question of anyone that you are looking at partnering with or handing large amounts of money to. Ask the questions. Stop being Canadian. Don't be ashamed to ask the questions, okay? Have we ever had deals go sideways? Yes. Has every one of our investors ever been paid or not paid? Never. We've always paid an investor their interest and their principal every time. Why has it been a positive experience still? Because we communicated back and forth. Okay, so these are the kinds of things that you need to look at, all right? There's no such thing as a perfect world. There are still things that come up even in real estate. I can only imagine how many investors right now with all the COVID stuff going on, what they're dealing with. And you're going to want to be partnered or pairing with or working with someone who's still going to pick up their phone, someone who's going to answer those questions for you, not someone who's going to just disappear, right? You may not like what they're going to tell you, but at least they're communicating with you. So those definitely, communication for me will be something I would hardcore be doing and looking into for due diligence. Other parts of due diligence are, again, it varies on you and what you're looking to get out of something. You can ask questions on risk. You can ask questions on security, those kinds of things. Risk to me is kind of a double-edged sword. There's risk in everything you do, right? You can cross the street and get hit by a semi truck that's driven by a unicorn. Okay, it could happen, right? I think it could. But anyways, but I mean, everything has risk. The question is, what's the risk to you and your scenario? Okay, that's the questions you need to really, really ask yourself and ask that person.
Yeah,
okay?
and it also comes to risk mitigation
Yes.
as well, because we've had some people, and it's interesting because some people will actually bring us other people's deals and be like, hey, I'm looking at doing this deal. Does this make sense? Should I do this? And at the end of the day, I mean, we're always going to say, you know what? I don't know what you want from us. I mean, obviously, we know when people come and work with us, they're good. If you go and bring somebody else your money, I mean, there's risk. I don't know those people you're lending money to. And I've actually given my 2 cents on some investments to other people. And I, I've kind of said, like, I don't know your relationship with this person, but if things go sideways, you will not get paid if you do this deal. Right. And they're like, oh, it'll be great. It'll be great. I don't know what these people had told them for their story and whatever. And at the end of the day, 50,000, 100,000, whatever, these people lost their money. And, it's crappy because, again, I'm not going to tell somebody what to invest in or what not to invest in. But that, in my opinion, was a big risk. But could they afford to absorb that loss? I guess they figured they could. And so sometimes when the returns are too high, or things sound too good to be true, and the people that you are asking the questions to can't give you what worst case scenario. So what happens if your exit strategy doesn't work in plan A? Do they have a plan B, C, and D? Because if there's no backup plan, get out. Don't do the deal, right? So for example, some people will ask us, well, like with your flips, what happens if you go to flip a property and something happens, you have to go and do more work than you thought there would be or whatever? Well, then for us, we just go get more funds from the other side of the company and we do the work. We don't ever go back to our investors and say, hey, the deal went sideways, we need more money, we can't keep working. That doesn't make sense. That was our problem, not our investors' problem. So for us, we would take care of it. If at the end of the day we go and flip a property, and some people will say, well, what happens if the house doesn't sell? And I'm like, you've got to remember how our business model works. We have our full ecosystem. We control the properties that sell because we sell them to one of our other investors on the other side of the business as a hassle-free landlord deal. We don't put it on the open market and hope and pray for a sale, right? So there's certain things that are very different. And again, like if you're just going to, fund somebody else's deal and they're going to be flipping in a completely different area or a different part of the world, and you don't know that part of the world, just make sure that you know what the backup plan is. And if it makes sense, then great. Maybe, for example, if you're going to do a deal in Ontario, so maybe their plan was to do an Airbnb. And for some reason, something happened to the market and Airbnbs don't make sense right now. Okay, well, what's their backup plan? Was it to turn it into a student rental? Was it to turn it into a regular rental? Was it to whatever? Maybe it would make sense to flip it, maybe whatever, but just make sure that the backup plan makes logical sense and that there is a backup plan, because let's be real, life happens and a lot of things are out of our control. COVID. So, there's a lot of things going on that we don't know what's going to happen. So at the end of the day, a lot of people asked us, well, what are you going to do if, people can't get mortgages? Okay, guys, let's just be real. The bank is always going to lend money on real estate, right? And so for us, we actually, decided, hey, you know what? Why don't we have fun with this? Let's do our 50 houses in 60 days for our hassle-free landlord deals. Well, great news. Can we see?
Sure.
We have 45 out of the 50 houses under contract right now. So at the end of the day,
bring those phones.
we find more. Exactly. So at the end of the day, when people are literally losing their mind, they're like, no one's buying, no one's selling, blah, 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 blah. So again, keep in mind, guys, this is how our business model works, right? When we sell a hassle-free landlord house, our fund to flip investor gets their money back. But remember, they don't want their money back. They want to get it back to us to keep it working so that at the end of the year, they're going to get their full annual rate of returns, right? So literally last night, I went back to 20 investors and said, hey, your money's coming back. What do you guys want to do? Blah, blah, blah. They're like, go find another house. Go find another house. Go find another house. Go find another house. So Alisa, how many offers did you put on properties 2 days ago?
I'm at 47 and counting.
There you go.
And
Right.
I've already got 3 that are coming back as winners.
And again, it's going to take some time to get these locked down.
Always does.
Right. And the reason is because of how we look for properties.
Tell them about one winner. It's crazy.
Do it.
So one of these houses, like all these offers I'm talking are sight unseen, right? So it's subject to viewing. This is what kills me. People are always so over analytical about everything. I submit the offers, I do the number, I see a few pictures, I've learned the area well enough that I can figure out where I should roughly go in at, right? And subject to viewing, right? Right now, the big thing is nobody wants you walking through houses because of everything going on. And I was like, well, you know what? Okay, well, let's make this serious and put an offer and then see if how they feel about it. It's funny how when all of a sudden a piece of paper is put down, that changes everybody's concept on, oh, nobody can come through. Oh, yes, let them come through, right? So anyways, this one house, not a word of a lie, it's literally advertised as a 3-bedroom, 2-bathroom. And I went there literally just before I came here. It's a 6-bedroom house. And I got it for really cheap. Like, I'm sorry. I mean, I'm just like, how do people do this, right?
And just
like,
full disclosure, guys, there's stupid realtors everywhere, but I think we have like a really high percentage in Saskatoon. Like, I really honestly feel like it's very saturated here, and it's sad because there's so many mislisted properties.
Yep.
It's kind of disgusting. Like, it makes me want to puke a little. Like, because again, like, how can you consider yourself an actual professional if you can't even count the amount of bedrooms and bathrooms in a property? Like, I'm sorry, but my 14-year-old niece could figure that out. I think my 7-year-old niece could figure that out. Like, come on. Like, it's
and
honestly
it happened
sad.
the week before.
Yeah. Okay. So tell them. Like, and this is fun, man. Like, it literally is.
So I, again, put an offer on a house, and I literally, I went to the one side of the house. I was like, okay, it's a duplex. I was like, you know what, this is good. But I still want to see the tenanted side to see if we're 100% doing this. So that was one of my subjects or clauses or whatever terms. Anyways, and I'm going, and I remember walking out of it, and I phoned Rochelle, and I was like, hey, Rochelle, we got this for an even better deal because there's a 3rd suite and a garage I didn't even know existed because it wasn't in the listing.
Yeah, literally. She calls me, and like, I think we had the staff in the office, and she's like, yeah, there's a basement kitchen and a garage. It's like, oh my God, this is hilarious. Like, you buy a lot of houses when you're like, bonus garage. Like, that's pretty crazy. Right?
So, and I'm like, so this happens all the time. There's nothing wrong with putting stuff into a contract so that things can start potentially happening.
What was the other one? The duplex on K. That was quoted as 11-bedroom.
Oh yeah, that was the other one.
Yeah. So this was a really wicked one because we're doing actually a lot of furnished rentals right now. Big and time. They're room rentals. So more kind of like boarding houses, right? So we're actually housing a crazy amount of large volumes, not large people. Large volumes.
Hey, we like large people too.
I mean, no, we don't discriminate, right? But at the end of the day, we are doing a lot of these furnished rentals. And so we have a wait list of people from the Salvation Army actually coming in and working with us. And
there's a bunch of groups actually.
Yeah, there's lots of groups. Yeah, which is great. And again, they know that we're good landlords. We're really attentive with our property care specialists, and there's just a lot of things happening, right? So Alisa had seen, well, we both saw it, I think. It came through one of the agents sent it, and it was a duplex. And so it's both sides of the duplex, but it said it was 11 bedrooms and 4 bathrooms between both sides. And we were like dollar bills, right? When we're literally renting out each bedroom for $600 a month. Like, that's pretty cool. Okay. So again, the realtor was trying to get us into it, and they would not let us into it unless we had an accepted offer subject to viewing, which is stupid because that's not even an accepted offer, but whatever. It's like a conditional offer. So Alisa worked on it with the realtor and it gets us into it. We go and look at it. It needs some love on the one side. The one side's pretty good, but it turns out it's actually a 12-bedroom because it's 6 and 6. And then there's a bedroom per floor, which is a bonus. We just got a bonus bedroom. And at the end of the day, do you remember how much you got that one for?
I think we got it for $375.
Yeah, I think it was $375.
Yeah.
And we haven't even done the work yet. And we just had it appraised for $450. Right. So this is going to be an upcoming hassle-free landlord house. So we're going to go in and switch it over to a furnished rental. But yeah, and this was on the market. Like these deals are everywhere, guys. But there's just so many people because here, yeah. So I'm talking in Saskatoon. So this kind of goes back to Alex's question. So what area in Saskatoon is good for investment for long-term rental and any development? So Alex, honestly, we're
biased.
Yeah, we're biased because again, for us, it's always down to the numbers, which is always going to put us in the west side. Now, at the end of the day, if you're not familiar with dealing with like inner city and west side tenants, I would never advise you to do that because they will eat you alive.
Yep.
Right? So at the end of the day, if you're looking for houses with the 1% rule, then honest to God, I'm just telling you this. And again, it's a plug for our business, but work with us. It's just going to save you so much time, energy, and money. And I guarantee you, you will make way better returns being a hassle-free landlord owner with us than trying to do any of that stuff on your own. Now, at the end of the day, if you did want to be an active landlord, I would suggest that you go get a newer build and that it has 2 suites and it's on a 25-foot lot and it's in one of the newer areas like Rosewood or Evergreen or whatever. And if you want, if you're ready to go in whatever, we can put you in touch with one of our realtors and make sure they get you a really solid property
for a
really great deal for sure. But I would not suggest that you try and go do this on your own if you don't have expertise. And also make sure that if you're going to manage it, you're ready to do all the things if you're going to manage it on your own, or you do have a really great property manager to work with, because in my opinion, here, those are really hard to find. So they do exist. You just have to find them. So that's kind of my suggestion there. I don't know where you're at, but
yeah, no, I 100% agree with Rochelle. Just a little background on Saskatoon. Saskatoon has always had this east side, west side thing going with a river going through it. With a river going through it, and basically it divides the city in half. It's almost like north and south is non-existent. It's just a river going through. And the west side, again, the big difference is it's the older area of the city for the most part. And the reason we like it, back to the numbers, taxes are lower, everything is lower.
The purchase price of that property is lower by like $100,000 per property, like huge. And these factor in to your total investment, right? The one thing that will be different is, and this said long term, so over time, the properties will appreciate faster on the east side, 100%. But at the end of the day, are you looking for a property that cash flows the whole time or just for a certain period of time?
Yeah.
Because in our opinion, we want it to cash flow the whole time.
Well, and the amount that you're having to put out to pay for, say, a 3-bed, 2-bath on the east side compared to the west side, are you really going to make that back in appreciation? Like the amount of time it's going to take to catch all that?
Yeah.
I don't think it'll balance out in the long run. I really don't.
And in my opinion, I would definitely do 2 smaller, more affordable west side properties, instead of doing one larger east side. And then you know what, your appreciation is going to be comparable.
Yeah.
So again, it depends on where you're at, but at the end of the day, I think everybody should just get a hassle-free landlord house, but hey, that's just me. All right. And then we have another question. I don't know how to say the name. Is it Atma? I'm not sure. Sorry. And so in terms of risk mitigation, can you speak a little about your strategy in the hassle-free landlord program to manage missed rents to COVID? So I don't know if you've just started following us, but when it comes down to the hassle-free landlord program, our investors never get impacted with anything. It doesn't matter if it's COVID or any other time of year. Yeah. So with the hassle-free landlord program, the agreement is that our company becomes your guaranteed tenant. So all of our investors always get paid their full rent on the first of every single month, regardless of if there's a vacancy or any maintenance or repairs. Our investors don't get don't get billed for property management. Like that's what we do. That's our agreement. So at the end of the day, with this question, there is no risk for our investors.
Yeah. And if you're wondering how we're covering off things for like the rents because of COVID and stuff, again, I've been following the stories about Ontario and BC and how many tenants are just like adamant, like we're just not paying rent. They've got the rent strike going. With our tenants, again, we knew going in to dealing with the tenants that we deal with in the social service group, the money comes from the government. Okay. So that money for the most part comes directly to us. There are some of our tenants that get the money, but even then they still hand it over to us. I think out of all the hundreds of houses we have 3 houses where tenants are not paying their rent because they heard Justin Trudeau say, we don't have to pay rent because we're tenants and it's COVID. So, and totally misrepresenting what was said, it doesn't matter. In the end, those 3 will get evicted and it is what it is, right? The other way we mitigate risk is, this is why it's dangerous for a person to own 1, 2, 3, 4, 5 houses. Okay. Because in this situation where you have something like this come up, if you have 5 houses and 4 of them are not paying rent and only 1 is, you're going to be in trouble. When we have hundreds and hundreds of properties, and if we say 20 of those houses or 30 of those houses stop paying rent, we still have the other whatever 300 that are still paying rent, right? So again, that mitigates your risk, right? The more houses we have, right, the easier it is to mitigate the numbers, right? So I guess basically our system is very different from a lot of people. Honestly though, I've been going around talking to a lot of landlords, even in Saskatoon. For the most part, very few people here have not really been paying their rent. There are some. I'm not going to deny that.
Yeah, but we were at the rentalsmen evicting every month anyway.
That's right. So, and that's the other thing that's very different from a lot of people in BC and Ontario. We weren't 10 months behind to get a spot. We were 2 to 3 weeks to get a court hearing, and then a few days later the sheriff came, right? So even when they open up here, which they're basically trying to make happen in the next 60 days, honestly, so we may be looking at a month when it opens up to getting a court hearing, and the 3 that we have will be immediately removed, and end of story.
And literally 3 out of hundreds of tenants, like, whatever. It's a numbers game.
Yeah.
So we're fine. So Alex says, can I send tenants I'm not comfortable dealing with? So again, it depends. Like for us, if you're not comfortable dealing with them because they're on social assistance, then by all means send them our way. We do have a lot of landlords who do that. But again, we don't rent to gangbangers, drug dealers, or prostitutes. So if they're like super ruffian and low vibe, like low level people that you figure they might be on meth or we're working the corner, probably not going to send those to us because we're not going to take them anyway. We do have a really tight screening process that has to happen, but that's where we go with that. But yeah, so our property management company, and again, keep in mind, we're not going to be anybody else's bitch. We're not going to property manage properties for you unless they are a hassle-free landlord property with us.
We have to have an invested interest.
Yeah, but at the end of the day, it's EA Properties. So Alex, feel free to follow us on EA Properties on Facebook. And then at the end of the day, just send them to us. We've got our numbers on there. Our team gets them and stuff. So yeah, social assistance, totally fine for us. Again, 90% of our tenants are on social assistance because at the end of the day, the government still pays.
And if they don't, we got much bigger problems to worry about.
Yeah, but Trudeau's in charge right now and he likes to pay everybody to not work and stay at home. So we're not worried. Okay, so Augustine, for fund to flip, how do you organize deals between yourself and multiple investors for one property? We don't.
Yeah.
We do one investor per property. So that's pretty much it. I'm not going to go into that. If you have any specific questions, feel free to reach out, but that's it. We do one investor per property. Alex, is it hard to evict tenants in Saskatchewan, or is Saskatchewan tenant friendly?
Okay, so let's just put it this way. All rental boards are tenant friendly, okay? The best way I can describe it is I find some of them have a hair more common sense maybe than others. Let's kind of play it that way over the friendly card, all right? Honestly, I think I haven't had the time that I'd like to put into really analyzing other provincial tenant boards and rentalsmen, those kinds of things.
We haven't had a need for it because we aren't interested in expanding out of Saskatchewan.
Yeah, so it's something I'll do for fun eventually. But with that being said, here we have a very, very high successful eviction rate within EA Properties. And it's because I went through, I read all the rules, I read all the laws, I keep up with the legislation, and it's like our lease is literally a roadmap to what the ORT wants for communication, okay? We have a 98%, 97%, varies from month to month, but about that rate of a conviction in our favor for eviction, okay? it just comes down to a lot of people have issues with tenant boards because they don't want to do the work that's involved so that the tenant board will side with them. They just want to come in and go, hey, this isn't right. They're doing this and it's wrong. It's a government agency, folks. Government agencies need lots of paper because that's how they roll. And they need lots of pictures because that's how they roll. And this is what we're talking about. We can even go back to active and passive. This falls into, if you're going to be an active landlord, you need to do all the things. That includes having your paperwork up to snuff, having proper documentation for posting 24 hours, for giving notices, for communicating with clients. If you don't have all of that, you're just basically playing Russian roulette as a landlord. Okay.
Yeah, and there's certain instances too. We know the laws.
Yeah.
We know the rules.
Yeah.
So, for example, I was just thinking of an incident we had last week, actually a week ago on Friday. I'd walked out of my office and there was a bunch of people, and we'd got one of the realtors that we had just bought a property through. He was the buying agent representing us, but he wasn't the listing agent. So apparently, we go in right away when we get properties and we take over the tenants, we go in and place a notice on the door saying we're going to come in on the day we buy the property and we're going to change all the locks, right? Mm-hmm. Because we need a copy of the locks. We want to make sure that we've gone in and we make sure the smoke detectors are working. We make sure that we've done our full walkthroughs and due diligence on that property. So we had went in and posted this, and we also get the property appraised right away if it doesn't need any renovating. And so I walked out of the office and they're like, did you hear about the screw up? And I was like, what? And that's why we got donuts. And I'm like, what's happening? So apparently the listing agent had contacted the tenants in the property and the landlord, and it was a duplex. We only got keys for one side. Well, we already had our appraiser booked in to go in there. Plus we already had our guys booked to go in and change the locks, right? And so I said, well, why does the landlord not have a key to his property? And he's like, I don't know, that whatever. Again, distressed landlord, right? Whatever. But I said, did we do proper notices? And they're like, yep. So I said, go drill the locks. Change them, and then when the people come back from the lake, whenever they get around to it, give them a key when they come back to town. Dude, that's our property. And everybody's like, can we do that? And I was like, yes, we can. There are rules in place. We follow those. But at the end of the day, you can't say that we don't have the right to enter our property when we've given you 24 hours notice, which is what the legal rules are to get access to our property. You don't have to be there as a tenant. We can go in and access our property. You don't need to be there. We can use our key or we can drill out the locks to go there because we've given you proper notice. So again, if you're going to play this game, guys, make sure you know your rules and regulations. And if the tenant knows the rental tenancy board better than you do not rent to them because they're a professional tenant. So there's red flags to listen for when you're interviewing a tenant. And if they're like, you can bait them too. You can be like, oh, really? I didn't know. Oh, how does that work? Tell me more. Yeah. And if they can screen like literally page by page by page, never rent to them because they're going to play you like a frickin' fiddle.
Your best thing to do, we're going to get into this next week anyways, but your best thing to do is when you're looking at tenants is that line that Rochelle said, you, like us, if you're interviewing somebody, don't talk. Let them do all the talking. Your only line is, oh, tell me more. Oh, tell me more. Because people will just get verbal diarrhea and start telling you everything about their life.
And then they'll tell you about their ex that's in jail and then their big dog that they left in the car
and how they were fighting with their sister.
And basement tenants are just so brutal. Like, honestly, people love talking about themselves. So awesome. And then so we'll move on to another thing. So Alex says states are more landlord friendly, I have heard. So Alex, don't believe everything you hear. So certain states are more tenant friendly than others, but like no,
New York, not so much.
California,
not so much.
Yeah. So do your research. Don't just tell me what you heard. So Dave, do you guys deal with foreclosures at all? Every day? Oh, let's talk about Taylor.
Oh, yeah.
Oh my God, we just scored an amazing. I'm so excited. I'm getting another Airbnb, so I'm super excited. But
for those of you that the video, what is it? Was it on the gram? Instagram?
The
gram. Right? Grandma here is talking about the gram. Anyways, on Instagram, there's a video of a hot tub, and you have to see what pops out of the hot tub.
Instabook.
Yeah, right? I've used that. And so yeah, it's at this Taylor house. So anyways, yeah.
So again, we buy anything that makes sense, right? So what had happened with this one of our wholesalers mentioned, hey, we found this house on Taylor. We don't look for a lot of east side stuff, guys. We just don't. It doesn't usually fit within our criteria.
Yeah.
But I have said that I would like a few more Airbnbs, but only if they're on the east side in specific locations and like close to 8th Street or like kind of central. And then they have to have 2 or more suites, because any of our places that are 50 or 60 bucks a night on the east side, oh my gosh, rented for months. Like it's insane. And so again, our other stuff is still running well too, but those are the things. So even if there's a few different vacancies than we had in one suite, the other ones are still full. They're cash cows. They're brilliant. And the more inventory that we can get on the east side, we know that stuff's going to appreciate faster eventually when the market turns and we could turn it into a homeowner house or whatever. So yeah, so it's fun. But this house, we went to look at it, and I think it was listed at 275 or something. I can't remember the exact listing price.
No, it was more than that. It was 285.
Okay, something like that.
89 or something.
Yeah, and so it was brought to us from the wholesaler who was working with his agent. And again, these foreclosures, they all get listed in Saskatchewan. All the foreclosures get listed with banks. So there's no like inside scoop. Sometimes we'll get a listing agent saying, hey, this is hitting the market tomorrow. Do you want to come and see it? Because they know we can close quick, but it still has to go through the banks and everything. It's pretty painful, actually, considering you can't get to just talk to the homeowner directly. But pre-foreclosures are different, but foreclosures, once the homeowner's already lost them, yeah. But this is crazy. So this property is right across the street from an elementary school, super close to Broadway. It's 2 suites. And these people, obviously, I don't know if they were flipping it or if they were homeowners, but they made like all the stupidest decisions ever. They literally did everything on the outside. They put on new shingles, they put in new soffit fascia, new siding, brickwork in the front. I don't even know how much time and energy they put into making this amazing rock pond in the front yard. It's so crazy. And I'm like, oh my gosh, when we get possession, we have ideas and we're going to make some cool videos with this because it's just so funny. But the inside, it used to be boiler heating. Obviously, they pulled out the rads at some point, but they literally paid to convert it to a furnace. What the hell? Like maybe you should have spent money on your kitchen and bathroom, not like converting the entire heating system. Like what the hell? So anyway, it's just sometimes people are screwed, whatever. But it's a massive lot. It's got a garage and it's got a hot tub. That's the one that Alisa was talking about. I don't know if we can make it work or whatever. But anyway, it's going to be a 2-bedroom, 1-bathroom and a 3-bedroom, 1-bathroom suited property. And we're going to use it on Airbnb. It's going to be amazing. There's tons of parking, a great location, super excited. Guess what we got it for? It was listed for 285. We said, guys want to put any guesses in the chat box? So took us a week and a half to nail it down with the bank, but we ended up getting it for $255,000. The city assessment on this property is $389. So we're going to put about $45,000 into it. So we will be in for $300,000, and it should appraise around $375 when it's all done. And that'll be an available hassle-free landlord program when we get done with it in about 2 to 3 months.
I bet it appraise higher.
Good. We always do our numbers really conservatively, guys. So when we do our numbers, we always guesstimate more for the renovations and then less for the valuation. Because again, at the end of the day, if we ended up spending less on the renovations, more in our pocket, and then at the end of the day, we were able to appraise it for higher, more in our pocket. No one's going to complain about making more money. I mean, I've never met somebody who could or did. But yeah, so that's that. So Dave question, how do you find foreclosures? Yeah, it's honestly like this was on MLS.
Yeah.
Listed on MLS.
Yes.
Like you could have got it, they could have got it, anybody could have got it. And they actually had quite a few offers. We just happened to, again, we do all quick cash, pick the possession date, anything you can do to make it like literally no conditions, like this could be over on this date. Just say yes, right? That's just our MO. And so at the end of the day, like, again, a lot of those offers that Alisa was doing, it's just going back to people who are distressed sellers. And it's funny because when they listed the property, we probably went and put a better offer than we even are offering now. But
it depends.
Yeah, but I'm just saying, like, in the beginning. So when we go to put an offer, say a property's only been on the market for 30 days, whatever. We're going to say the property's listed at 200,000 and we figure it's worth 170. So we might go put an offer for 170, say here, close it next week, 170,000 cash, no conditions, boom, it's done. And then all of a sudden this person's like, no, we're going to do better. We should sell this for 190, whatever. Then at the end of the day, they're going to turn around and it sits on the market for another 30 days, another 30 days, another 30 days. They do a price reduction now to 190, 180, 170, Well, what the hell do you think we bought it for? 150, 160, maybe. We do this all the time, guys. It's funny. I mean, not funny for them, but funny for us. And so yeah, we tell people too, like, guys, like, we know what we're doing. We know our numbers. And, you know, if you want to sit on it and be foolish, and sometimes it's an ego thing, sometimes it's a pride thing, I don't care. We'll go buy 5 more houses down the block. No big deal. We don't get emotional about it. It is what it is. So we are going to wind up here soon. We got a few minutes, but do we have any more questions?
Yes. Alex says, why is the city assessment so much off? Market value, 120K for my condo, and city taxes at 220.
Oh, wow.
Where's
What?
his condo?
I don't know.
The city's drunk. No,
Yeah.
I'm just kidding. I don't know. Honestly, I don't know. The city is all over the map with
They really are the
valuations.
city assessments. We can, let's use Caswell Hill as a
Yeah.
prime example. By our numbers for what we've been getting for appraisals and market values and buying, that city assessment is in upwards of 15 to 20% overvalued to what the market's doing. Again, you have to remember these, the city doesn't pivot and adapt to what's going on in the market. They basically come in, and whatever it is when they do their assessments in that moment is what they're going to do with it. So if your neighborhood was hardcore assessed in 2009 when everything skyrocketed, the city's going to, you know, to some degree follow that, right? The other thing is, if a city is kind of analyzing and anticipating a neighborhood is going to climb because they feel it's going to, what's the term,
Go through gentrification or be a hot area,
then they're also going to raise it. So,
yeah, so there's certain areas
Yes.
that we know like never go off of city valuation. So we've got Riversdale is jacked. We've got Mayfair is jacked. Caswell Hills
Yeah.
jacked. Like there's literally probably about 5 of them that we buy in where we know that that's way too high. So
Yeah.
this is why it's really important to not just assume and go off of city valuation, but it's also the opposite is true on the east side. So any properties that we go to buy on the east side, that's usually about 10 to 15% below fair market value.
Yeah.
And so you just need to know your markets. You need to know your area.
And then can you just touch on for Vinny the fund to flip rates and if they're paid monthly or annually?
Sure. Vinay, for fund to flips, they are a 6-month deal. It's a 10% annual rate of return, and you're going to get paid out at the end of the deal. So again, we don't pay monthly with a fund to flip. We pay at the end of the deal because we pay the investor when we get paid, and we only get paid when we sell the property. If you want monthly payments, hassle free, that's all I got for you, my man. Anything else? Cool. So any more questions? You guys got a little bit of time. We got 5 minutes. 5 minutes. No, we won't do that one. Which one? Okay. No, we'll just leave it because that's a whole other thing. We got 3 questions for next week. So like we mentioned, this is going to be continued in part 2, which is going to be next week on Wednesday, May 27th at 7 p.m. Saskatoon time, 7 p.m. our time. And that would be 6 p.m. PST for all our peeps out in Van. And then we've got 9 p.m. EST for all our folks out in the Big TO. And yeah, hope you guys got a lot of information. Alex, we will put you in touch with our realtor. Yeah. Do you just want to text me? And I'll put you in touch with them. And then we can, I just want to have a quick call with you, Alex, just to find out exactly what you're looking for, because we work with various agents and some of them have different areas of expertise.
100%.
So we want to just make sure we put somebody in touch with you who's going to be the best fit.
And Atma, I believe it was, says, what are your capital requirements for buying into the hassle-free landlord program? How much money do I need? Okay, so for the hassle-free landlord program, you are going to need the 20% down payment that the bank is going to qualify, and then you have to qualify for a 80% loan to value mortgage, and then you're going to need the closing costs. So we roughly say that it's going to be about 21.5% of the total purchase price of the property. Now keep in mind, we do have properties that range from right now 125,000 all the way up to 270,000. So we can work with you where you're at. So even if you only had 25,000 to invest, you can start with us and a little hassle-free landlord house.
There you go.
Any more questions?
No, we got a few minutes left.
Oh, tour. Thanks, Bailey. Totally forgot. Yeah, so we're in one of our other, this is our Ruth Street Airbnb. So it's really close to the exhibition ground. It's a little tiny 2-bed, 1-bath. Colleen?
Do you have a recommended local mortgage broker?
Yeah, we have 2.
Yeah.
So Colleen, I don't know if you want to put them both in there. Okay, Bailey's going to write them in the chat. We've got 2 rock stars here. And honestly, it's super interesting, but we just actually onboarded a new financing team that we're going to be working with out of Vancouver. So we're going to give them a shot. They're amazing boys, and we call them our mortgage bros, and we're the Epic girls. So we're going to do some really fun alliances there. But yeah, super excited. So we're going to do a quick tour. Let's go. Where do you want to start? Well, I don't know. Can you see? Okay, just on the quick porch. So this is a 2-bedroom, 1-bathroom property. It's super cute. It's super small, but we made the best use of it, and the design is kind of fun. So I went with like the Metro. Not what did I say? I can't remember what I called this one. But anyway, I went with like the Maryland vibe, Audrey Hepburn. I'll get out of here because it's really small, but it's just kind of got glitzy glam. I went with lots of pretty shiny things. This was my chandelier that I made out of a broken lamp and a $1 light bulb. So yeah, we always try to repurpose stuff and make use of what we have.
And this house is actually a prime example of an East Side house that we would have not typically bought.
That's my favorite. That's my favorite piece. It's like a hutch, or what do they call it? I can't remember, but I made it a TV stand.
Side table?
Side table, that's what it is. But I made it a TV stand because I was like, oh my gosh, I need this in here. And all the pretty pillows.
And yeah, so this house we would have not typically bought for, using as a rental property, but under the Airbnb it fits, and in future for flipping it also fits.
Yeah, and the numbers on this house were amazing. It was a distressed owner. We got it for $180,000, and then we had it appraised for $225,000. We did very little work. It was pretty much turnkey. I think we did a couple of rooms of painting, and then I just staged it. It was in really good shape.
I'm trying not to make you guys sick. I'm trying not to spin too fast. Again, I'm not GoPro pro, I guess you would say. Oh, that's a red clock. And then, wow, jazzy kitchen.
This is like the retro kitchen. This was all like this. And look at the stools I found. I thought they were perfect. I'm like, oh my gosh.
I'm not sitting in those.
No, but it was just super cute. So it reminded me of like the Coca-Cola diners days. So kind of went with that. And then it's got this, it's actually a double lot. And it's got this massive garage, which I actually use for my staging stuff. But check out the backyard. We got a little patio set. It's got some good green space. So, and I mean, it's like $60 a night, 2 bedrooms. So people love it. They get their own space. The basement has the laundry. It's pretty basic, but yeah. So if you ever come to Saskatoon, let us know if you need a place to stay. We'd love to host you. So I think we may as well end it up. I think we're like at time.
Yeah.
So, okay.
Cool.
So thank you guys for being on the call. We appreciate you, and we'll see you on part 2 next week. In the meantime,
stay epic.